Welcome back inside the Nebraska Soybean Board Studio for another edition of Monday Morning Markets. I'm Bryce Doeschot, and today we're once again pleased to be joined by Jeff Peterson. He is the president of Heartland Farm Partners. Good morning, Jeff. Thanks for being here.
Good morning. It's always great to be here, Bryce.
Well, it's a new week, also new month. What are some of the factors that you and your team are keeping a close eye on as we enter November?
Yeah, anytime we come into a new week and actually, more importantly, a new month, just as you said, Bryce, one of the things we take a look at is over the charts. And when we take a look at the charts, as we look at those, we can look at them on a daily basis, a weekly basis, or a monthly basis. And we like to, since it is a new month, take a look at the monthlies. And as I took a look at those this morning for corn and soybeans, they do look higher. We traded higher. We didn't pull back quite as far as where the lows would have been the previous month. So from a monthly chart, we look good. However, from a weekly chart, it is not as good. And what we're seeing, and we're going to have to watch this, Bryce, closely this week, is what we're seeing is what we'd call a key reversal down. And that's one thing if you have it on a daily chart, but it's another thing that adds a little bit higher significance on a weekly chart. And what that means is that we traded higher this last week, but then we also traded lower than what the previous week was, and we closed lower than we did the previous week. So we went higher than the previous week, we went lower than the previous week, and we closed lower. So that's a formation we'll want to continue watching. The other thing that we're watching closely right now because of the time of year is South American weather and South American planting progress.
You talk about how we ended last week, and maybe not quite as high as some people were hoping for based on the highs we saw earlier in the week, but what are some of those main factors driving that? Is it the South America right now?
Yeah, we get a little bit on the South America side because there was some concern about their planting pace, and that's improving. The other thing I think we got is the COVID. Not so much that we're seeing things happen, except if you're over in the UK, we're seeing some tightening down there. But I think the fear out there, and we've seen it spill over into the crude oil market, is that we're going to see more tightening happen. Maybe in other places in Europe, maybe there's some regional things that happen in the US. And anytime we start seeing that, coupled with the uncertainty of the election, that's been what's setting up some of our weakness, I'd say, coming into this week and finishing out last week.
Well, each week on this program, Jeff, you and I like to break down some of these terms. Appreciate your willingness to do that. And one of them this week, we're going to talk about the funds. We often hear that on our daily reports. People talk about what are the funds doing. And I was talking with you, in my opinion, kind of the role of the funds complicates the markets. So break this down. What are the funds and what's their intent and purpose in the markets?
Yeah, no, that's a great question. And anytime we talk about the funds, really what we're talking about is on one side of the equation, it's speculative traders. Usually we refer to the managed money type funds, and what we're talking about there are individuals that are really focused on just using the market, corn, soybeans, wheat, and all the other different commodities out there to physically go ahead and make money. So their intent is to buy low and see the market go higher, sell higher and see the market go lower, or they can buy higher and hope it even goes higher. So their intent is to have that happen. Now, they do serve an important function, and what that function is that they are filling in that gap between the buyer and the seller. So if we just had farmers and we just had commercial buyers and they wasn't enough of them that were willing to meet in the middle, kind of like you see sometimes happen in the markets before we had the speculative traders, they step in there in the middle, and a lot of them may think, well, I think it's going to go higher, I think it's going to go lower. So they bring to the market what we call liquidity, the willingness to go ahead and be a buyer to a seller or a seller to the buyer. They fill in that gap. So they prove an important purpose for us in the markets.
They never intend to take delivery. You kind of, as we were talking ahead of time, talked about, it's just like owning a little bit of Apple. It's a stock for these people. They're there to make money.
Yeah, that's exactly right. Their intent on the fund side. Now, there's people who do use the market with the intent to take delivery, but the funds, as a general rule, do not intend on delivering bushels against those contracts or physically going ahead and receiving bushels because they own contracts. They definitely don't.
Something good to break down. Appreciate you coming in this week to do so, Jeff. And coming up next week, we're going to talk about commitments of traders, or COT. We'll look forward to that conversation next week and also see how the trade is changing week to week. That and more coming up next week on the Monday Morning Markets. We'll see you then.